Have you seen what Bitcoin did recently? Wow. That massive, just absolutely violent surge of thousands of dollars in a single day, that is exactly why we need to talk. Because in the markets, there's always a story. There's always a rhythm being set. The real question is, who's beating the drum? Let's get into it. And I love this opening line from our source material for today. It's a promise, right? A promise to pull back the curtain on some of the market's more, let's say, cynical truths. My goal here is just to lay out that perspective for you so you can see it and make up your own mind. So let's just start with a really direct question for you. When you're investing, when you're reading the news, do you ever find yourself just kind of moving with the crowd? I mean, are you feeling bearish right now? Because if you are, you should know you are absolutely going with the consensus. You're part of the mass. And that might be a really good time to just pause and think about that. To really understand why, we're going to dive into this first key concept. And it's a brilliant metaphor from an old classic film, Ben-Hur. You know that iconic scene with the galley slaves all rowing in the warship? Well, it perfectly illustrates the two key players in any market narrative. Okay, so first you have the commentary. This is the officer, the galley master. He's the guy standing at the front beating that big drum. He sets the pace. He creates the rhythm that everyone else has to follow. In our modern markets, the commentaries are the ones who craft the dominant story. That big narrative that suddenly everyone seems to believe.
And, of course, who follows that rhythm? Well, that's the chisma, the galley slaves, the mob. And our source material points out this fascinating little detail about where the word comes from. Chisma literally comes from the two distinct beats of the commentary's drum.
Chus ma. Chus ma. I mean, that is the sound of the consensus. It's the sound of the herd rowing in perfect, unthinking unison. It is the cadence of the market mob, and it's driven entirely by the narrative the commentary is beating out. So you always have to ask yourself, am I just rowing to someone else's beat? So this whole idea leads us straight into our second key point, the contrarian opinion theory. And this is so important. Being a contrarian is not about just automatically doing the opposite of whatever the crowd is doing. That's not smart, that's just reckless. It's a very strategic theory, and it only works when you apply it in the right context. The theory is actually a really simple three-step process. Okay, first, you figure out the major long-term trend. Is the market fundamentally bullish or is it bearish? Step 2, you identify the short-term consensus. What is the mob, the chusma, feeling right this second? Are they scared? Are they greedy? And then step 3, and this is the magic, you only act when those first two things are in direct conflict with each other. And this slide just lays it out perfectly. A great buying opportunity happens when the long-term trend is still up, but the short-term consensus is screaming down. The mob is scared, right? They're selling into what is still a fundamentally strong trend. But look at the other side. If the long-term trend is also down and the crowd is bearish, well, going against them then is a really bad idea. You're just fighting the tide. Context, you see, is absolutely everything. So this begs the question, right? Who are the modern-day commentaries? Who has been beating that drum of fear in the crypto markets lately, creating that chusma cadence of panic selling? Well, according to our source, the answer might just surprise you. Well, our source points a finger directly at some of the biggest names in finance. He's got JP Morgan out there publicly slamming crypto while, oh so quietly, launching leveraged Bitcoin products. You have Goldman Sachs buying up crypto firms to build their own ETFs. Bank of America is telling its clients to allocate up to 4% to crypto. And Vanguard, after saying they would never allow Bitcoin buys, is now offering crypto ETFs to its 50 million clients. You see the pattern? They beat the drum of fear for you while their actions tell a completely different story. Which, of course, brings us to the most obvious question of all. If these huge institutions are the commentaries, beating that drum of fear that led to the recent dip, then who are the chusma? Well, it was the weak hands. It was the retail investors who were terrified by the narrative, who sold their positions right into the waiting hands of the strong hands, the very institutions that were quietly buying it all up. Okay, enough theory. Let's get practical. For this case study, we're going to apply this entire framework to what just happened with Bitcoin. I mean, was that crazy surge off the lows actually predictable using this theory? Let's take a look at the evidence. So, according to our source, the entire analysis really hinged on one simple but incredibly powerful trend line on the long-term chart. This one line, connecting the highs from 2021 and 2024 with the lows from 2022, basically represented the intact long-term uptrend. This was, and I quote, the line that changed everything. This slide right here just lays out the whole contrarian setup perfectly. On the one hand, you had all the short-term signals flashing bright red. Technicals looked awful, market sentiment was in extreme fear, the consensus was screaming, get out, sell. But, and this is the part that matters, that long-term trend line held like a rock. The underlying structure was totally intact. The mob was panicking right into a fundamentally strong trend. It was a textbook contrarian buying opportunity.
Okay, so where do we go from here? After that huge rebound, the next major battleground is the resistance zone between about $94,000 and $97,000. That's an area where a lot of trading happened in the past, so it's a natural hurdle. If Bitcoin can just consolidate and punch through that zone, the next logical target identified in the source is way up around 107,500.
And look, this wasn't just some pattern on a chart. The on-chain data was telling the exact same story. You had a positive Coinbase premium, which suggests that U.S. institutional money was buying, and you had high negative funding rates, meaning tons of people were betting on the price going down, which is basically fuel for a massive short squeeze. The smart money was buying the fear. All right, so from our final takeaway, let's zoom out a bit, because this isn't really just about Bitcoin. This is about a mindset. It's about learning to actually hear the drumbeat of the market and then deciding for yourself if you want to row along with everybody else, or if maybe, just maybe, it's time to set your own rhythm. And if you think this is just some weird crypto thing, think again. As of this analysis, the S&P 500 is sitting just 80 points away from its all-time high. And yet, what's the dominant narrative? What's the drumbeat you hear everywhere? Fear. The consensus is stubbornly bearish, even as the market is literally knocking on the door of new records. Does that sound familiar? And this brings us to the final, really fascinating hypothesis from our source. What if Bitcoin's rebound isn't just about Bitcoin? What if it's the canary in the coal mine, signaling that liquidity is quietly returning to the entire market? Because if that's true, then strength in Bitcoin today could mean strength in stocks and other assets tomorrow. So here's the bottom line. The drum is always going to be beating. A narrative is always going to be pushed. The only question that really matters is the one you have to ask yourself every single day you look at the markets. Are you listening to the chusma and just rowing with the mob, or are you ready to pick up your own oars and set your own rhythm?